Hello CMA final students. Many of you are asking me to do video on direct taxation MCQs. Finally, I am here with you with regard to DTMC. I have compiled MCQs from past exam question papers and model question papers and institute released MCQs. Total 293 MCQs are compiled by me. I will share this material with you also. See, let us do 293 MCQs. If you do alone, it will be boresome. So listen to my video. Trust me, if you alone do these 293 MCQs, easily you will get 10 marks in exam. At least 5 MCQs will come out of these 293 MCQs in the exam. If you answer those 5 MCQs correctly, trust me, easily you will get 10 marks. Worst case, even if you get 6-7 MCQs also from these MCQs. So whatever the discussion that we are going to do right now, that will definitely get you minimum 10 marks. So don't miss watching this video. Do all these MCQs, 293 MCQs along with me, and you will definitely score minimum 10 marks. See, 1/4 pass, you need to get 40 marks. 1/4 you will pass by listening to this MCQs. So this video is very, very important. Listen. Another thing is, I am going to do this video in 2 parts. Past exam question paper MCQs, model question paper MCQs, I will do as part 1, and institute released MCQs I will do as part 2. Okay? Because if I discuss total 293 MCQs at a time, your brain get heated up. That's why let's divide it into 2 parts and let us learn all the MCQs very clearly. So shall we start? Yes. First, June 25 exam question paper MCQs. Vignesh Private Limited has received order passed by CIT appeals confirming the additions made to its total income in the assessment. What is the time limit for filing its appeal before ITAT? See, CIT appeals can be challenged within 60 days from date of receipt of CIT appeals order. However, with effect from 1st October 2024, there is an amendment. Whatever the order passed by CIT appeals is there, that can be challenged within 2 months from end of the month in which order of CIT appeals is received. So the right answer is D. Latest amendment in Finance Act 24, that is asked as first MCQ. Okay. What is the rate? See, what is MAT rate? You already know. MAT rate is 15%. Vijay Child Welfare Trust is registered under Section 12A of Income Tax Act. For assessment year 25-26, its income before allowing exemption under Section 11 and 12 exceeded maximum amount which is not chargeable to tax. It failed to file its return of income by due date. See, if ITR is filed lately by trust, then penalty is 500 rupees per day for which the default continues. Answer is C. Which of the following can be carried forward to subsequent assessment years? I already discussed in class. Business losses, capital losses, losses from owning and maintaining resources. These 3 losses, if you want to carry forward to subsequent years, mandatorily you have to file ITR. That ITR is also required to be filed within the due date. Then only you can carry forward. However, house property loss, unabsorbed depreciation. These 2 losses you can carry forward to subsequent years even though you file ITR after the due date. So, which can be carried forward even if it is filed beyond the due date? House property loss and unabsorbed depreciation. So the answer is A. During reassessment of RR Associates, a partnership firm, assessing officer found misreported income to the extent of 20%. See, for misreported income, how much is penalty? 200% of tax. So how much is tax on 20 lakhs? 20 lakhs into 30% plus 4% HEC. How much it will be? $20 lakhs into 30% plus 4%, 6,24,000. Penalty is 200%, right? Into 200%. That is 12,48,000. Deepthi, a resident individual, subscribed to shares of various domestic companies and earned dividend income of 6.6 lakhs for the year ended 31st March 25. He borrowed 120 lakhs for purpose of investment in shares of domestic companies, and interest on such borrowings was 2.2 lakhs. See, dividend income is not taxable. To earn a dividend income, if we borrow any money, on borrowed money, we will pay interest, right? Interest paid on money borrowed for earning dividend income. Such interest is allowed as deduction. So, how much is dividend? 6,60,000. From this, deduction is allowed. How much will be the deduction? Actual interest or 20% of dividend, whichever is lower. How much is actual interest? Actual interest is 2,20,000. 20% of dividend 6,60,000 into 20% 1,32,000. Whichever is lower means 1,32,000 is allowed as 5,28,000 is taxable. The answer is next. For assessment year 24-25, Rita Limited filed its return of income on 30th October. The return was selected for scrutiny for making regular assessment under section 143.3. What is time limit for serving notice under 143.2? The 143.2 notice can be issued within 3 months from end of the assessment year. What is assessment year 24-25? End of assessment year is 31st March 25. From here 3 months. That means 30 June 25. So this is the Amitabh is a dealer trading in mobiles and laptops. For financial year 24-25, his turnover is 105 lakhs. Out of which 55 lakhs was received through UPI NEFT. That means 55 lakhs is bank turnover. How much is cash turnover? 50 lakhs is cash turnover. For bank turnover, we will apply 6%. For cash turnover, we will apply 8%. 50 lakhs into 8% plus 55 lakhs into 6%. Total 7,30,000. A search was initiated under section 132 in the premises of Sky & Co LLP on 10th December 2024 and last of authorizations was executed on 18th December 24. You know block assessment, right? What is block period? Block period will be from when raid was completed, search was completed on 18th December 24. So 1st April 24 to 18th December 24 plus last 6 previous years. 6 previous years means previous year 23, 24, 22, 23, 21, 22, 20, 21, 19, 20, 18, 19, 17, 18. Correct. So the answer is till 1819, 6 years. So this is the block period. So the answer is A. Next, which of the following companies can be treated as resident in India? Every Indian company is resident in India. In case of foreign company, we will check POEM, place of effective management. So if POEM is in India, foreign company is resident in India. If POEM is outside India, foreign company is non-resident. So PQR Limited of UK, turnover in India was 75 crores, operates in India through a branch office in Kolkata. Its global turnover exceeds 1500 crores. See, head office is located outside India, only branch is located in India. So obviously it is non-resident. Bruno GmbH of Germany, place of effective management is wholly in India. If it is wholly in India, then it is resident in India. Inferno Inc. of USA, place of effective management is wholly outside India. If it is wholly outside India, non-resident. So correct answer is A. Bruno GmbH only treated as resident in India. But Institute gave the answer C. Institute answer. But Institute answer is not correct. I differ with Institute answer. Correct answer is A only. Michael, a non-resident but citizen of India. See, non-resident plus Indian. So we call him as NRI. Earned a gross dividend of 50 lakhs from an Indian company. Shares were purchased in convertible foreign exchange. What shall be the rate of tax applicable on dividend income? See, for NRI, Chapter 12A provisions are applicable. In that case, for non-resident individual, Indian, NRI, whatever the investment income is there, interest income or dividend income, that is taxable at the rate of 20%, flat rate of 20% plus applicable surcharge and HEs. Next, Giri and Co, a partnership firm, has paid a sum of 9 lakhs as interest on capital at the rate of 12% to a non-resident partner. The TDS obligation on the firm is, the TDS is required to be deducted at the rates in force as per section 195. See, whenever you are making payment to non-resident, 195 gets added. What is the monetary limit of tax benefit by means of arrangement? See, when GAR provisions are applicable if tax avoidance is more than 3 crores. So the answer is A. During 24-25, Orange Limited Delhi bought shares for 25 crores from FII. All the shares are listed in recognized stock exchange in India. Purchase and sale of shares resulted in long-term capital gain of 3 crores and short-term capital gain of 2.5 crores. How much tax should Orange Limited deduct at source out of the payments made to FII for purchase of listed shares? See, for buying shares, you are not required to deduct any TDS. It is not interest payment or dividend payment or professional fee. You are buying shares. It's capital expenditure. So, for buying shares, you are not required to deduct TDS. Next, Ganapath Limited informs you that in assessment, there is increase in income by way of arm's length price adjustment of 200 lakhs. Instead of making secondary adjustment, company wants to pay additional income tax. See, additional income tax will be 20.9664%. Okay, so the answer is. Now let us discuss December 24 MCQ. Ganesh Private Limited engaged in manufacturing activity covered by section 115 BA. How much is the income? 24 lakhs. Book profit is 45 lakhs. How much is final tax liability? See, under section 115 BA, what is the tax rate? 25%. So, generally tax is 24 lakhs into 25% plus 4% HEC. How much? 6,24,000. How much is MAT? MAT is 15%, right? 45 lakhs into 15% plus 4% HEC. 7,02,000. Out of these two, whichever is higher, that means 7,02,000. Maximum time limit for rectification of any mistake. See, as per section 154, assessing officer can rectify his mistake in the assessment order if that mistake is apparent from record within 4 years. 4 years from end of the financial year in which order is passed. So this is the answer. Interest for deferment of advance tax. Section 234C. Chaitanya, a resident, is employed in a multinational company as a general manager. He paid for his residence 60,000 as monthly rent. See, salaried employee, he is not businessman. Salaried employee is paying rent, amount of rent is more than 50,000. So TDS is required to be deducted under section 194 IB at the rate of 5%. Whether TDS is required to be deducted every month? No. TDS is required to be deducted in the last month. So March month. Answer is D. Naveen, employed in a FMCG company, constructed a residential house property meant for self-occupation. He availed bank loan of 60 lakhs. Loan was sanctioned on 1st April 21. Interest on loan for financial year 23-24 amounts to 3,50,000. Naveen actually paid 2,50,000 towards interest. How much amount of interest is eligible for deduction? T. How much is interest on self-occupied property? 3,50,000. Out of 3,50,000, 2 lakhs he can claim as deduction under section 24B. Remaining 1.5 lakhs he can claim as deduction under 80EE or 80EA. But loan should be sanctioned in previous year 16-17. Here loan was sanctioned in sanctioned on 1st April 21. So is it eligible for deduction? No, it is not eligible for deduction under 80EE, 80EA. So the answer is A. Only 2 lakh rupees interest under section 24B is allowed. Which of the following cannot be adjusted under section 143(1)? You know intimation, right? Under section 143(1), 5 type of errors will be rectified. Arithmetical errors, incorrect claims, if you file ITR after the due date, losses cannot be carried forward, and discrepancy between tax audit report and ITR. And if you file ITR after due date, you cannot claim 10AA deduction, 80IA, 80IB deduction. All these errors will be rectified while processing the ITR. So incorrect claim that can be processed, arithmetical error that can be processed. Any income appearing in Form 26A which has not been included in total income, this cannot be rectified by 143(1). So answer is C. In assessment of X company private limited, assessing officer made addition of 12 lakhs. Tax payable was 3,12,000 and interest. Addition, it is misreporting of income. If it is misreporting of income, penalty is equal to 200% of tax, right? That means 3,12,000 into 200%, 6,24,000 is the answer. Dave Limited, an Indian company, deducts TDS from salary of its employees. To avoid interest and penalty, always deposits TDS 5 days before the prescribed due date. So this is tax management. Okay. Ketan, resident individual, acquired an apartment in Singapore during financial year 2021, and only 50% of its acquisition price was disclosed to income tax authorities in India. Fact of non-disclosure of the assets full acquisition price came to the notice of assessing officer in April 23, and notice under section 10 of Black Money Act was issued in June 23. What is the time limit for passing the order? See, under Black Money Act, to pass the order, 2 years time limit is available from end of financial year in which notice was issued. Notice was issued in June 23. End of year means 31st March 24. From here, 2 years time limit is there. That means 31st March 26. This is the answer. Income tax assessment under 143(3). This is nothing but scrutiny assessment, right? In case of Mohit Private Limited, for assessment year 22-23 was completed with arm's length price adjustment of 200 lakhs. Accepted the arm's length price adjustment, wants to pay additional income tax. Additional income tax is 20.9664%. How much it will be? 200 lakhs into 20.9664%. 41,93,280. Assessing officer referred an international transaction for 3 crores entered into by Anuj Private Limited with HUINC and associated enterprise. In the same financial year, Anuj Private Limited has entered into similar transactions with AST LLP of Singapore for 4 crores and RST LLP of Hong Kong for 12 crores. What is the scope of power of transfer pricing officer? In regular class also I have discussed. Whenever determination of arm's length price, if it is referred to transfer pricing officer, not only transaction referred to transfer pricing officer, for any other transaction also transfer pricing officer can determine arm's length price. So the answer is D. TPO can determine arm's length price in respect of any other international transaction also. Next, Robert, famous tennis player, came to India, played in tennis tournament. He stayed in India for 31 days. He earned 10 lakhs as participation fees. See, what is the TDS? 20% plus 4% HEC. So 10 lakhs into 20% plus 4% HEC. How much it will be? 2 lakh 8,000. This is the order of transfer pricing officer in determining arm's length price of an international transaction is binding on assessing officer. See, whatever the transfer pricing officer order is there, assessing officer should accept it. TPO order is binding on assessing officer. Leka and Co LLP, having entered into international transactions, did not furnish a report. See, if audit report is not submitted under section 44 AB, how much is penalty? 0.5% of turnover or 1,50,000, whichever is lower. However, under section 92E, in case of transfer pricing, if audit report is not submitted, then penalty is equal to 1 lakh. Okay, so the answer is, which model of DTAA is generally followed by India? India generally follows UN model of DTAA. Now, let us discuss June 24 exam question paper MCQs. Vinayak Private Limited has total income 32 lakhs for assessment year 24-25. It has not opted for 115 BA, 115 BAA. Its annual turnover was less than 50 crores. How much is in income tax payable? Obviously, generally for domestic company, in previous year 23-24, if turnover is less than or equal to 400 crores, tax rate applicable is 25%. So 32 lakhs into 25% plus 4% HEC, correct? How much it will be? 8 lakhs plus 4%, 8 lakh 32,000. Answer is correct. Next, Balu employed in ABC Limited from 1st November 23 after he discontinued his proprietary business in textiles. He was given rent-free accommodation at Kolkata from the same date. His basic salary was 1 lakh and DA is 50,000 per month. See, in Kolkata, obviously, population is more than 40 lakhs. So, then taxable value of perquisite is equal to 10% of salary. So, here salary is 1,50,000. It is into 10%. How much? 15,000. 15,000 into 12 months, 1,80,000. So, the answer is A, 1,80,000. Next, Kailash is resident individual who owns an apartment in Singapore acquired on 19th August 2020. He had disclosed only 60% of its value in his income tax returns. Assessing officer received this information of partial non-disclosure on 18th February 24 and issued a notice under Section 10 of Black Money Act and Imposition Act on 10th April 24. What would be the value of asset liable to tax? See, 60% is already disclosed, remaining 40% is taxable now. And that 40% actual value not. 40% of fair market value of the asset in the year in which notice is issued. Notice is issued in previous year 24-25, right? So as on the beginning of 24-25, on 1st April 24, whatever the fair market value is there, in that fair market value, 40% is taxable. Okay, so 40% of fair market value as on 1st April 20. Next, Chinta Cooperative Society is engaged in manufacturing activity and was set up and registered on 20 April 23. Its total income computed for previous year 23-24 was 22 lakh 50,000. How much is the tax payable by it under section 115 BAE? Okay. Consider both, sir. See, under section 115 BAE, tax rate is 15% plus 10% plus 4%. Correct? How much it will be? 22 lakh 50,000 into percent 386,100. So the answer is 386,100 D. TBF Limited, an Indian company, deducted 1,20,000 from various payments as TDS for the first quarter of financial year. However, it has failed to file TDS return for the said quarter. How much shall be the amount of fees payable? See, if you do not file TDS return within the time, late fees is 200 rupees per day. But maximum late fees cannot exceed the amount of TDS liability. So late fees is, here TDS liability is 1,20,000. 200 rupees every day until the failure continues, subject to a maximum of 1,20,000. Fifth one is D. Anil, a resident, has derived short-term capital gain of 35,000. Okay. From sale of shares under section STT is paid. That means this is short-term capital gain under section 111A. Long-term capital gain of 80,000 from sale of shares STT is paid. So long-term capital gain under section 112A 80,000. 9,000 on sale of cryptocurrencies. How much is the amount of tax payable by Anil in respect of capital? Ignore surcharge and HEs. See, long-term capital gain is less than 1,25,000, so it is not taxable. Short-term capital gain tax rate is 20%. On sale of virtual digital asset cryptocurrency, tax rate is 30%. So 35,000 into 20% plus 9,000 into 30%. Overall 9,700. Sixth answer is Tarun, a resident, sold virtual digital asset with the help of a broker through an exchange. Sale consideration was 6,05,000. See, on sale of virtual digital asset, TDS under section 194S is equal to 1%. 6,05,000 into 1%, 6,050. So the answer is Raghav Industries Limited was subject to search under section 132 and a sum of 300 lakhs by way of cash was found as undisclosed income. Raghav Industries Limited has unabsorbed depreciation. See, against undisclosed income is taxable under 115 BBE and effective tax rate is 78%. Okay, against undisclosed income, you cannot set off unabsorbed. Swami sold his residential house on 21st April 23 for 110 lakhs and earned long-term capital gain of 60 lakhs. He bought a new residential house. See, whenever you sell house, if you do reinvestment, you can claim exemption under section 54. This we call as tax planning. So answer is A. Next, Hicks Limited, which has entered into international transaction attracting transfer pricing provisions, declared a final dividend of 10% on its paid up capital 20 crores. It has received dividend of 80 lakhs, 23 November 23. See, very simple. Whenever you receive dividend from domestic company is required to pay tax. I will explain. Okay. Actually, what happened is video got corrupted, so I am doing re-recording. Okay. For example, domestic company received dividend 80 lakhs. Now this is distributed to shareholders. Now domestic company is required to pay tax on 80 lakhs and shareholder is also required to pay tax on 80 lakhs. It is leading to double taxation, right? To avoid double taxation, for domestic company, deduction under section 80M is allowed. Okay. How much is dividend received? Dividend received is 80 lakhs, right? From this 80 lakhs, deduction is allowed. Deduction under section 80M. How much? Actual dividend received or dividend paid to shareholders within ITR due date. Dividend paid to shareholders within ITR due date, whichever is lower. How much is actual dividend received? 80 lakhs. How much is dividend paid? 20 crores into 10%, 2 crores. Whichever is lower means 80 lakhs is allowed as deduction. So taxable dividend is 0. So deduction allowed is 80 lakhs. Answer is B. For Roberts INC of Italy, which of the following would mean that it has a permanent establishment? See, operating a factory in India, that will be treated as permanent establishment. Answer is B. What is Berry ratio? Please remember, only this MCQ is being asked in the examination. Gross profit by operating expenses, that will be considered as Berry ratio. Gross profit by operating expenses. While determining arm's length price of transactions between A Limited Mumbai and its holding company BINC UK, there was an addition of 300 lakhs. See, how much is secondary adjustment? 300 lakhs into 20.9664%. Correct. So it will be 62 lakh 89,920. Answer is B. Mittal Limited Pune exported goods to its holding company Glory Limited UK for 20 crores and it has failed to keep and maintain information and documents in respect of 5 crores. See, in case of transfer pricing, if they fail to maintain documentation, then penalty is equal to 2% of transaction value. Here they fail to maintain for 5 crores, correct? So 5 crores into 2%, it will be 10 lakhs. So C is the answer. Next, which of the following method of computing arm's length price is not a transaction based method? Profit split method is not a transaction. Now, we will see June 25 MQP set 1. Mr. Ram has won a lottery prize. After deduction of tax, he received 14 lakhs. See, this is net amount, right? After deduction of tax means he spent 60,000 by way of purchase of lottery tickets. Amount chargeable to tax, we need to do gross up. 14 lakhs divided by 17 to 100, it will be 20 lakhs. So 20 lakhs into 30%. Amount chargeable to tax is 20 lakhs. Tax is 6 lakhs plus 4% HEC. Amount chargeable to tax is 20 lakhs. Mr. Bala is using a computer for his personal purpose but charges it as business expenditure. See, if he is using computer for personal purpose, he should not claim depreciation on computer. But he is showcasing it as business use and he is claiming depreciation. His action is not correct. What he is trying to do is tax evasion. Okay. Next, Ganesh businessman whose total income before allowing deduction under section 80 GG is 4,60,000. He paid house rent at the rate of 12,000 per month in respect of residential accommodation occupied by him at Mumbai. What is the deduction allowable under section 80 GG? Okay. See, rent paid minus 10% of adjusted total income or 50% of adjusted total income or 5,000 per month, whichever is lower will be allowed as deduction. Rent paid is 12,000 per month. 12,000 into 12, 1,44,000. Minus 10% of adjusted total income, 4,60,000 into 10%, 46,000. The difference is 98,000. Or 1,44,000 divided by 2, 72,000. 5,000 per month, 60,000. Whichever is lower means 60,000 is eligible for. See, generally MAT rate applicable is 15%. However, if unit is located in IFSC, International Financial Service Center, then MAT rate applicable is 9%. Okay. Next, as per section 178 subsection 3, with of a company who has to intimate the tax authority, liquidator has to intimate the tax authority before he parts with any assets. That's what. See, whenever a company is liquidated, liquidator will be appointed. Before liquidator deals with the assets. Before liquidator sells the assets, liquidator has to intimate to income tax department that he is appointed as liquidator and he is about to sell the assets. Okay. What is the maximum surcharge rate that can be applied for individual taxpayer in respect of income by way of long-term capital gain? We have discussed 4 incomes. Long-term capital gain under section 112, 112A, short-term capital gain under section 111A, dividend income. For these 4 incomes, you cannot apply 15% surcharge rate, correct? So, you cannot apply 25% and 37% surcharge rate. Maximum surcharge rate you can apply is only 15%. Next, Abhishek was found to be the owner of jewelry worth 26,60,000 during financial year ending 31st March 25, which was not recorded in his books of accounts, and he could not offer satisfactory explanation of the source of income for acquiring the same. How much of income tax is payable? See, it is undisclosed income, right? So 78%, 26,60,000 into 78%, 60% base tax, 25% surcharge plus 4% HEC. 20,74,800. Next, in which financial transaction is quoting PAN compulsory? Cash payment of 40,000, it is less than 50,000, PAN not required. Sale or purchase of immovable property, it is less than 10 lakhs, PAN not required. Payment of 35,000 to RBI, not required. Payment exceeding 50,000, in this case PAN is required. Answer is D. Next, XYZ company engaged in business of manufacturing and biotechnology incurs expenditure on scientific research towards land. See, whether land expenditure is allowed? No. Building, capital expenditure, that is allowed as deduction. Other capital expenditure, 8 lakhs also allowed as deduction. Revenue expenditure of 5 lakhs. So, 5 plus 8 plus 12, 25 lakhs, correct? Answer is C. Which section deals with methods to computation of arm's length price? See, 92A, associated enterprise, 92B, international transaction, 92C deals with arm's length price. Okay. Next, Merces Potato Limited, a company having international transaction 3 crores related to purchase of raw material from its subsidiary Merces Tomato Inc. in USA. Potato is required to keep and maintain records. See, in case of transfer pricing, records are required to be maintained for a period of 8 years. Okay, from end of relevant assessment year. 12. When interest paid by Indian company to a foreign company being an associated enterprise, such interest must not exceed 30%. Section 94B. In capitalization, whenever you pay interest to your associated enterprise, such interest should not exceed 30% of EBI TDA. If it exceeds 30%, excess is to be disallowed. If any person fails to keep and maintain any such information, document as required by section 92D in respect of an international transaction or specified domestic transaction, assessing officer or commissioner appeals may direct that such person shall pay by way of penalty 2% of value of that international transaction. We have discussed 5 crores. 5 crores into 2%, 10 lakhs. Okay. Secondary adjustment is necessary when primary adjustment crosses 1 crore. The answer is B. What is Berry ratio? I have told gross profit by operating expenses. This is Berry ratio. Next, MQP set 2. Mr. Chittarajan, aged 65 years, is a non-resident individual. His total income for financial year 24-25 amounts to 101 lakhs. He has opted out of default tax regime. See here, marginal relief is available. Tax on 1 crore plus additional income over and above 1 crore. So here income is 101 lakhs. So above 100 lakhs, how much is there? 1 lakh. So tax on 1 crore plus 1 lakh plus HEC at the rate of 4%. How much is tax on 1 crore? Calculate. See, if total income is more than 50 lakhs and up to 1 crore, 10% surcharge is applicable. Do you remember? So opted out of default tax regime. That means paying taxes under optional tax rates. 2,50,000 into 5%, 5 lakh into 20%, 90 lakh into 30% MRC, 28 lakh 12,500 plus 10% surcharge. 2,81,250 plus 1 lakh overall HEC at the rate of 4%. $33,21,500. A is the next. Mr. Mitai Lal purchased a residential house property on 28th June 2022 for 10 lakhs and incurred additional expenditure of 3 lakhs on improvements in July 2022. He sold the house property in March 24 for 25 lakhs. When he bought 28th June 2022, date of purchase. What is date of transfer? March 24. Period of holding less than 24 months. So is it long-term capital asset or short-term capital asset? Short-term capital asset. See, whenever you sell house property, you will get capital gains. If you reinvest those capital gains, you can claim exemption under section 54. But exemption under section 54 is available only against long-term capital gain. Here it is short-term capital gain. So exemption under section 54 is not available. Okay. So how much is sale proceeds? 25 lakhs. How much is cost of acquisition? 13 lakhs. Short-term capital gain is 12 lakhs. Answer is B. Okay, next. Mr. Junjunwala, a property dealer, sold a flat in Kolkata to his friend. See, he is property dealer, remember. So property is not capital asset to Junjunwala. Property is stock in trade to Junjunwala. Sold to his friend Satyam, a trader, on 15th August 24 for 2.25 crores. Stamp duty value of the property is 2.5 crores. So there is Junjunwala and there is Satyam. Junjun and there is Satyam. Junjunwala is property dealer. Sold. How much is sale value? 2.5 crores. Sorry, 2.25 crores. Stamp duty value 2.5 crores. Junjunwala is required to calculate capital gains. Correct? Whenever immovable property is transferred, in case of property dealer, section 43 CA gets attracted. You need to compare stamp duty value with 110% of actual consideration. Stamp duty value 2.5 crores. 2.475 crores. Stamp duty value is greater than 110% of actual consideration. So sale value is 2.5 crores. How much is cost? Junjunwala bought flat for 2 crores. So cost is 2 crores. So how much is capital gain? Sorry, how much is PGBP income? PGBP income is 0.5 crores. In the hands of Satyam, he is buying for inadequate consideration. Inadequate consideration of immovable property. So what we will do? We will compare stamp duty value minus actual consideration with 50,000 or 10% of actual consideration, whichever is higher. Stamp duty value 2.5 crores, actual consideration 2.25 crores. So difference is 0.25 crores. 50,000, 10% of actual consideration means 2.25 crores into 10%. 0.225 crores. So obviously 0.25 crores is greater than 0.225 crores. stamp duty value minus actual consideration is greater than 50,000 or 10% of actual consideration, whichever is higher. So taxable value is equal to stamp duty value minus actual consideration, which is equal to 0.25. So what is the correct answer? 50 lakhs taxable as business income and 25 lakhs taxable under income from other sources in the of. This is the correct answer. Every company to whom provisions of MAT are applicable is required to obtain a report of chartered accountant in Form 29B. Very important, remember. Under provisions of Income Tax Act, a return of income can be revised under section 139(5). See, original return can be revised. 139(4). Belated return can be revised. Revised return also can be revised. So answer is all of them. Provisions relating to advance ruling are provided in section 245N to 245B. If amount of income in respect of which penalty is imposed or imposable for relevant year exceeds how much, then no order reducing or waiving of the penalty shall be made by principal commission. 5 lakhs. See, if amount of penalty is more than 5 lakhs, then principal commissioner cannot waive it off. He need to take approval of higher authority. Yeah, answer is correct. 7C. In the year of restructuring, depreciation, whenever amalgamation happens, whenever demerger happens, whenever private limited company gets converted into LLP, whenever this restructuring happens in the middle of the year, then we will calculate depreciation for whole year. Whatever the depreciation for whole year is there, that is to be apportioned between preceding entity and a new entity based on number of days that asset is used. So the answer is B. Next, Mr. Subrata, a salaried individual, paid brokerage of 46 lakhs to Mr. Sudeep, a broker, on 12th January 25 for purchasing a residential house. His father, Mr. Bhima, a retired pensioner, made contract payments of 18 lakhs, 23 lakhs and 15 lakhs respectively to Mr. Manoj, a contractor, for the reconstruction of his residential house. Based on the provisions, see, here amount paid is 46 lakhs, which is less than 50 lakhs. So 194M is not applicable here. However, here how much amount is paid? 18 lakhs plus 23 lakhs plus 15 lakhs. How much? 56 lakhs. Which is greater than 50 lakhs. So he is required to deduct TDS. Father Bhima is required to deduct TDS. Subrata is not required to deduct TDS. Answer is next. As per section 94B, interest should not exceed 30% of EBI TDA. Potato Limited filed its return of income with suo motu adjustment 300 lakhs in respect of arm's length price. See, primary adjustment. Primary adjustment is done on suo motu basis. Then excess money is required to be repatriated to India within 90 days from ITR due date. So within 90 days from ITR due date. Next, in assessment of Amit Private Limited, there was increase in income by way of arm's length price. See, secondary adjustment, what is the rate? 20.9664 per. For ALP INC of Italy, which of the following would mean that it has a permanent establishment operating a factory? This is repeated. Already this we have seen. Which of the following method of computing arm's length price is not a transaction based method? This is also repeated. Profit split method is not a transaction based method. A sold mission to B and in turn B sold the mission to same mission to C at a sale margin of 30% for 4 lakhs. But B has incurred 4,000 in sending the mission to C. From the above date, how much is resale price? Resale price is 4 lakhs. How much is GP margin? 30%. How much? 1.2 lakhs. Next, expenses 4,000. How much is arm's length price? 2,76,000. Okay, that will be treated as arm. While computing book profit under section 115 JB, one of the following is required to be reduced. See, we will reduce brought forward losses or unabsorbed depreciation, whichever is lower as per books of accounts. Okay, so brought forward loss or unabsorbed depreciation, whichever is less as per books of accounts. That is correct answer. A Limited filed its return of income for assessment year 24-25. This is repeated. Within 3 months from end of assessment year, notice is required to be given under 143(2). Assessment year 24-25 from ending 3 months. That means 30 June 25. Yeah, 25. A is the answer. Next. India Limited purchased computers for 5 lakhs on 6th October 23, installed the same in its office and put the said computers to use on the same date. Depreciation allowable. The rate of depreciation on computers 40%, right? 5 lakhs into 40%, which is 2 lakhs. Here they are put to use for more than 180 days. So you can charge full rate of depreciation. Answer is I am sorry. I am very sorry. 6th October 23. That means put to use is less than 180 days. Put to use less than 180 days. So only half rate of depreciation is allowed. So the answer is 1 lakh. I am very sorry. Ram is found to be owner of 2 gold chains of 50 grams each, value of which is 1,30,000. During financial year ending 31st March 24, which are not recorded in his books of account, and he could not offer satisfactory explanation. Deemed income 78% tax, correct? So 1,30,000 into 2, 2,60,000 into 78%. How much? 2,02,800. A is the next. ABC Limited credited 28,000 towards fees for professional services and 27,000 towards fees for technical services to the account of ROM in its books of accounts. See, for professional services, separate threshold limit is available. For technical services, separate threshold limit of 30,000 is available. If you remember 194J, only if payment crosses more than 30,000, then only TDS is required to be deducted. That 30,000 threshold limit is applicable for each payment separately, professional services separately, technical services separately, like that. So no TDS is required to be deducted. Next. Mr. Virat is aggrieved by an order passed by Commissioner of Income Tax imposing penalty under section 270A for underreporting of income. What is the time limit available to him under Income Tax Act? Yeah, he can file appeal to appellate tribunal within 2 months from end of the month in which order is communicated to him. Next, for previous year ended 31st March 24, a public charitable trust registered under 12AB derived income of 10 lakhs from properties held under the trust and 15 lakhs from voluntary contributions. Out of which, see how much are total income derived from property held under trust is equal to 10 lakhs plus 15 lakhs, 25 lakhs. Out of 25 lakhs, 15% standard deduction. How much it will be? 3,75,000. Balance 21,25,000. From that, how much is spent for charitable purpose? 8 lakhs. 4 lakhs is towards repayment of loan. So 12 lakhs is allowed as deduction. How much is taxable? 9,25,000 is. Next, during previous year 23-24, Mr. Rohit has 80 lakhs of short-term capital gain taxable under section 111A, 70 lakhs of long-term capital gain taxable under section 112A, and business income 90 lakhs. Let's plot. Short-term capital gain under section 111A. How much? 80 lakhs. Long-term capital gain under section 112A, 90 lakhs. Sorry, 70 lakhs. Other income 90 lakhs. Total 240 lakhs. And he is paying taxes under default tax regime. See, under default tax regime, if total income is above 2 crores, surcharge rate is 25%. But can you apply 25% surcharge rate for short-term capital gain and long-term capital gain under section 112A? No. For these incomes, you will apply only 15% surcharge. For other income, you will apply surcharge rate applicable for other income. For 90 lakhs, surcharge rate applicable is 50% or 15%. Whichever is higher means you will apply 15%. So overall, for all the incomes, you are going to apply 15%. Yeah, answer is B. Mr. Salman, a property dealer, sold a flat. This is repeated. We have already done. We have done this calculation, right? 50 lakhs and 0.25 crores. 50 lakhs, 0.2 crores. Answer is B is a foreign company having permanent establishment in India, namely A. C, a non-resident enterprise, has invested 900 crores through debt in A. Earnings before interest, tax, depreciation and amortization 150 crores. What is the amount of interest allowable? Maximum deduction allowed is actual interest or 90% of EBI TDA, whichever is lower. How much is actual interest? 900 crores into 10%, 90 crores or 30% of EBI TDA. 150 crores into 30%, 45 crores. Whichever is lower means 45 crores is allowed as 10A. GAR provisions shall not apply. GAR. Whenever you hear the word GAR, 3 crore rupees should come into your mind. It should not exceed 3 crores. Next. Zero India Private Limited borrowed 500 crores from an Indian bank by INC, USA. YINC guaranteed borrowings of Indian company. Select the correct statement. See, as per section 92A, if one entity guarantees at least 10% of borrowings of another entity, then both are treated as associated enterprises. So 500 crores into 10%, how much? 50 crores, correct? So this is the case. C is the next. Akash, a resident Indian, has earned an income of US dollars equivalent to 4 lakhs in previous year 23-24 by way of lump sum consideration for copyright of a book being a work of literary in nature from a publisher in country E with which India does not have DTAA. The same has been taxed at flat rate of 5% in country E. The amount has been remitted to India in March 24. His gross total income as per Income Tax Act 1961 is 7 lakhs. What would be the deduction available? If he opts out of default tax regime, that means optional tax rate. Under optional tax rates, how much is the tax? Up to 2.5 lakh nil. Above 2.5 lakh up to 5 lakh, tax amount is 12,500. Above 5 lakh up to 10 lakh, tax rate is 20%. So 7 lakh minus 5 lakh into 20%. Much? 40,000, correct? So 52,500. How much is HEC? 2,100. 54,600. So how much is average tax rate? 54,600 divided by 7 lakhs into 7.8%. How much is tax rate in foreign? 5%. Correct. 7.8% or 5%, whichever is lower means 5%. So how much is relief? Doubly taxed income is 4 lakhs. 4 lakhs into 5%, 20,000 is the relief. So the answer is A. But answer given is D, which is not correct, I think. Institute gave answer D, but that is not correct. Next, tax haven. In tax haven, when we call a country as tax haven, where tax rate is 0 or lower tax rate. Okay, there is no tax on income or tax rates are very low. PQR Limited Kolkata having international transaction exceeding 100 crores omitted to furnish report. See, if you are covered under transfer pricing provisions and if you do not submit audit report under section 90E, 92E, then penalty is 1 lakh rupees. A. Now, book profit for the purpose of section 115 JB. See, book profits are computed based on net profit determined as per Schedule 3 of Companies Act. You all know Companies Act P&L and balance sheet will be prepared as per Schedule 3. We will take Schedule 3 profit as a base. Then we are going to do some adjustments. Thereby we will calculate book profit. What is the due date for filing return? See, whenever transfer pricing provisions are applicable, due date for filing ITR is 30th November, correct? So November 30 of assessment year. While computing book profits under section 115 JB, one of the following is required to be reduced from net profit. This is repeated. We will reduce brought forward losses or unabsorbed depreciation, whichever is lower as per books of accounts, correct? Next, prosecution can be launched and taxpayer can be punished if he commits willful failure to produce before income tax authorities the accounts and documents as demanded as per section 142(1). See, under 143 assessment will be done, under 147 also assessment will be done. Under which section books of accounts are asked? Books of accounts are asked as per 142(1). So, as per 142(1), if you fail to submit the books of accounts and documents, prosecution provisions will get attracted. Next, Mr. Coco and Mr. Popo sold their residential house properties in Pune for 3 crores and 4 crores respectively. So, there are two persons, Coco and Popo. Sold their houses. How much is sale value? 3 crores, 4 crores. The house was purchased by them 25 months back. So he is saying it is long-term capital asset because period of holding is more than 24 months. Indexed cost of acquisition 1 crore and 1.75 crore respectively. So 1 crore, 1.75 crore. How much is gain? 2 crores. Here it is 2.25 crore. Correct. Coco purchased 2 residential flats, one in Delhi and another one in Agra. See, here long-term capital gain. Long-term capital gain. Here it is exactly 2 crores. So reinvestment in two house properties is eligible for exemption under section 54 EC, but only once in a lifetime. Here it is greater than 2 crores. So he need to invest only in one residential house property for claiming exemption under section 54 EC. See, reinvestment can be done in two house properties. Both house properties are eligible for exemption, but two conditions are there. Long-term capital gain should be less than or equal to 2 crores and the benefit is available only once in a lifetime. Correct? Now, Poco purchased two residential flats. Both are eligible for exemption. So, 54 EC exemption is equal to 70 lakhs plus 80 lakhs. 150 lakhs is eligible for exemption. How much is taxable? Only 50 lakhs is taxable. Popo also purchased two residential flats, one in Mumbai, another one in Pune. Two house properties are not eligible, only one is eligible. Which is better to take 80 lakhs or 75 lakhs? We should take 80 lakhs because that is higher. Exemption is 80 lakhs. Both of them invested 30 lakhs in bonds of NHAI and RECL. That is eligible for exemption under 54 EC. I am sorry, 54 EC. 30 lakhs. 2.25. 145 lakhs. Again, you can claim exemption 30 lakhs. So here it is 20 lakhs. 115 lakhs. How much is the answer? Okay, got it. Both of them invested 30 lakhs in NHAI, 30 lakhs in RECL. So total investment is 60 lakhs. But maximum allowed is 50 lakhs only. Maximum allowed under section 54 EC is 50 lakhs. Correct? So here total 50 lakhs is eligible for exemption. Capital gain is 0. Here 50 lakhs is eligible for exemption. 95 lakhs is taxable. So the answer is nil and 95 lakhs. Answer is next. ICDS 7 deals with government grants. A Singh officer within his jurisdiction surveyed a popular cyber cafe at 2 a.m. in the night. The cyber cafe is open for business in between 3 p.m. and 3 a.m. See, survey can be conducted during business hours. Cafe is open at 2 a.m. because business hours are 3 p.m. to 3 a.m. So 3 p.m. to 3 a.m. it is open. When survey was conducted at 2 a.m. that means survey was conducted during business hours only. It is correct. It is in order. Answer is A. Next. Who among the following is not mandated to file return of income under section 130? If he incurs loss, he need to file ITR. Aged 63 years, having total income 3,30,000, more than 3 lakhs, he is also required to file ITR. Travel to England during the year, spent 3,50,000 on his travel, more than 2 lakhs, he is also required to file ITR. Sunita, non-resident, having assets worth 2 crores in India and 5 crores assets outside India. So she has not earned any income. So she is not required to file ITR. In the year of restructuring, this is repeated, we have discussed. Whatever the depreciation is there, in the year of restructuring, depreciation is to be allotted between preceding entity and new entity based on number of days that asset is put to use. Next, Q is a foreign company having permanent establishment in India, namely PR, a non-resident associated enterprise, has invested 600 crores through debt in P. EBI TDA was 150 crores. How much is allowed? Actual interest or 30% of EBI TDA, whichever is lower. Correct? How much is actual interest? 600 crores into 10%, 60 crores, or 150 crores into 30%, 45 crores. Whichever is lower means 45 crores is eligible for. Next, XYZ Limited has failed to report an international transaction entered into by it with PQR Inc., which is a specified foreign company in relation to XYZ Limited. Penalty is 2% of value of international transaction and 200% of tax payable on underreported income. Answer is C. Both can be levied. Yes. As per which section, specified domestic transaction is to be carried out between associated enterprise. Section 90 deals with DTAA. 91 deals with DTAA. 90A also deals with DTAA. 92 deals with transfer pricing. So this is the correct answer. Information and documents are required to be maintained for how much period? Regularly, books of accounts are required to be maintained for 6 years from end of assessment year. In case of transfer pricing, books of accounts are required to be maintained for 8 years from end of assessment year. In the context of double taxation avoidance agreement, permanent establishment means fixed place of business through which business of an enterprise is wholly or partly carried on. TE do not include. C. Maintenance of fixed place solely for the purpose of advertising. When an advance pricing agreement is entered between the taxpayers, the tax administration of host country and the foreign tax administration. See, generally, advance pricing agreement is entered between taxpayer and CBDT. How can it be entered internationally? The answers given are not correct. Kumar Industries is engaged in manufacture of leather products. It was set up in backward area and is eligible for subsidy at the rate of 25% for generator to be used in guest house. If it is used in guest house, additional depreciation is not available. Acquired by it on 15th December 23. So put to use less than 180 days. So how much is cost? 12 lakhs. Subsidy at the rate of 25%. How much it will be? 3 lakhs. 9 lakhs. So generator depreciation 15% into 1 by 2. 67,500. Answer is A. Let me check the answer. Next, in the year of restructuring, this is repeated. Whatever the depreciation is there, that is to be allocated between previous entity and new entity based on number of days that asset is used. Uncontrolled transaction. Uncontrolled transaction means what? Two unrelated parties, two independent parties. Enterprises in between enterprises other than associated enterprises. See, if transaction is entered between two associated enterprises, we call it as controlled transaction. If it is entered between other than associated enterprises, then we call it as uncontrolled transaction. Okay. Provision of section 92 will apply only if aggregate value of specified domestic transaction crosses 20 crores. See, if specified domestic transactions are more than 20 crores, then only transfer pricing provisions are applicable. Otherwise, transfer pricing provisions are not applicable. Next, in respect of DTAA, generally India follows UN model. ICDS is applicable in case of income under the head TGBP. RD Fertilizers Private Limited is a manufacturer. A factory building has been constructed for 40 lakhs. Occupied on 12th February. So put to use less than 180 days. Additional depreciation. See, additional depreciation is available only for plant and machinery. Here it is building. Whether building is eligible for additional depreciation? No. Building is not eligible for additional depreciation. Okay. MSP Limited has spent sum of 20 lakhs towards meeting its CSR expenditure. The CSR expenditure is not allowed as deduction. Total 20 lakhs will be disallowed. Next, Napa Limited earned income of 15 lakhs by way of transfer of carbon credit. See, that income is taxable at the rate of 10%. Carbon credit income. 15 lakhs into 10%, 1,50,000. Plus 4% HEC. Overall, 1,56,000. Next, Vikash has advertised on Facebook to promote his business of coaching. He is required to pay 20,000 in the previous year. The amount paid is less than 1 lakh. So, equalization levy is not applicable. Answer is D. When an SSE fails to furnish any information relating to specified domestic transaction, quantum of penalty is obviously if you do not disclose any international transaction or specified domestic transaction, penalty is 2% of transaction. A is using a motor car for personal purpose but charges as business expenditure. What he is doing? Tax evasion. Country that employ explicit policies designed to attract international trade oriented activities by minimization of taxes and reduction of elimination of other restrictions on business operations is described as the tax havens. Tax havens are the countries where tax is zero or tax is very low. So thereby tax haven countries will attract foreign investment. Next, during the course of survey in the premises of Ratan & Co. on 10th January 24, stock of goods purchased worth 10 lakhs were found to be not recorded in books. So this 10 lakhs is undisclosed assets. Against undisclosed income, can you set off brought forward losses? You cannot set off brought forward losses. Undisclosed income is straight away taxable at 78%, which is 7,80,000. Next, GAR provisions. When GAR provisions are applicable, if tax avoidance is more than 3 crores. This is also repeated. So all past exam MCQs and past mock question paper MCQs were discussed. Institute released material MCQs are to be discussed. Those I will discuss in part 2. Now in this video, I will discuss with you Institute released MCQs. There are total 173 MCQs. All will be discussed. Let us start. As per section 115 JB, see 115 JB is relating to MAT, right? What is the MAT rate? MAT rate is 15%. Next, MAT shall not apply to any income accruing or arising to a company from life insurance business. See, for insurance businesses, MAT provisions are not applicable. Similarly, those who are paying taxes, domestic companies paying taxes under 115 BAA, 115 BAB, for those domestic companies also, MAT provisions are not applicable. Next, book profit for the purposes of section 115 JB means profit as shown in the statement of P&L prepared in accordance with Schedule 3 of Companies Act. That's what, right? Schedule 3 of Companies Act gives format for preparation of P&L and balance sheet. So whatever the P&L that is prepared as per Schedule 3 Companies Act is there, we will take that net profit as base. Thereby we are going to calculate the book profits. Next, every company to whom provisions of MAT apply is required to obtain a report of chartered accountant in form number 29B. See, once you calculate book profits for the calculation of MAT, whatever the book profit calculation is there, that is to be certified by a chartered accountant in form 29B. Next, while computing book profit under section 115 JB, one of the following is required to be reduced: brought forward losses or unabsorbed depreciation, whichever is less as per books of accounts. So, very important. In book profit calculation, I have already explained to you. While calculating book profits, you can reduce brought forward losses or unabsorbed depreciation, whichever is lower. Not income tax brought forward loss. Companies Act brought forward loss or Companies Act unabsorbed depreciation, whichever is lower is eligible to be reduced. Next, what is due date for filing ITR in case of a company who is required to furnish report under section 92E? See, whenever transfer pricing provisions are applicable, due date for filing ITR is 30th November of assessment year. So, November 30th of the assessment year. Next, one of the following can be carried forward even if return is filed after the due date. I have told you. Business losses, capital losses, losses from owning and maintaining racehorses. These three losses, if you want to carry forward to subsequent years, mandatorily you are required to file ITR. That ITR is also required to be filed within the due date. If these two conditions are satisfied, then only you can carry forward those three losses. However, house property loss, unabsorbed depreciation, these two can be carried forward even if ITR is filed after the due date. Okay. So unabsorbed depreciation can be carried forward even if ITR is filed after the due date. Return filed under the following sections can be revised. See, original return can be revised, belated return can be revised, revised return also can be revised. So the answer is D. Assessment under following sections is termed as scrutiny assessment. 143.3 assessment is termed as scrutiny assessment. When SSC has paid advance tax more than the tax due on the returned income and the return is filed before the due date under section 139(1), refund amount is eligible for interest. See, on refund amount, income tax department will pay interest. Rate of interest is 0.5% per month. So, answer is B. Any mistake which is apparent from record in the order passed by assessing officer can be rectified. See, order passed by assessing officer can be rectified under section 154 within 4 years from end of the financial year in which such order is passed. In case of application made by SSC under section 154, income tax authority shall rectify the order or rectification within 4 years. I have told you, right? Answer A. No appeal to CIT appeals shall be filed in the form number. An appeal to CIT appeals. See, CIT appeals shall be filed in the form number 35. So the answer is A. Joint Commissioner Appeals is the first appellate authority. See, CIT appeals, JCIT appeals is first appellate authority. Second appellate authority is ITAT, Income Tax Appellate Tribunal. Next, provisions relating to advance ruling are provided in section 245N to 245B. Next, assessing officer or SSC as the case may be on receipt of notice that appeal against order of CIT appeals has been filed by other party may file memorandum of cross objections. See, memorandum of cross objections is required to be filed within 30 days in form 36A. Answer is C. Where revision under section 264 has been initiated by SSC, application must be made within how much period? Within 1 year. So within 1 year. Prosecution can be launched and taxpayer can be punished if he commits willful failure to produce before the tax authorities accounts and documents. This is as per 142(1). See, as per section 142(1), notice will be issued to produce books of accounts of last 3 years. If SSC fails to produce books of accounts of last 3 years, then penalty prosecution also gets attracted. If a person fails to comply with provisions relating to PAN, obtaining PAN, quoting PAN, etc., then penalty can be levied under section 272B, I think. Yeah, answer is correct, 272B. See, there are certain cases where you are required to quote your PAN number. If you are buying any motor vehicle other than two-wheeler vehicle, you are required to quote your PAN number. You are buying, you are cash depositing more than 50,000. You are withdrawing cash more than 50,000. You are required to quote PAN number. If you do not quote PAN number, penalty will be levied under section 272B. Next, if during any proceeding it is found that in books of accounts maintained by any person, there is a false entry or omission of any entry which is relevant for computation of total income of such person, to evade tax liability. Penalty under section 271 AD is, I think A is the answer. Sum equal to aggregate amount of such false or omitted entry. So whatever the false entry that is asked is there, to the extent of such amount, penalty will be levied. Next. If amount of income in respect of which penalty is imposed or imposable for relevant assessment year exceeds, then no order reducing or waiving of the penalty shall be made by Principal Commissioner. 5 lakhs. See, if penalty exceeds 5 lakhs, then Principal Commissioner has to take prior approval of Principal Chief Commissioner or Chief Commissioner or Principal Director General or Director General before passing the order of waiving of the penalty. Okay. Yeah, C is the answer. Next, Principal Commissioner or Commissioner of Income Tax is empowered to grant relief from penalty to taxpayers in genuine cases. Such power is granted under section 273A and 273AA. In case of amalgamation, eligible loss of amalgamating company shall be available to amalgamated company for fresh period of 8 years. See, whenever amalgamation takes place, whatever the losses of amalgamating company are there, those losses will be transferred to amalgamated company, and amalgamated company can carry forward these losses for fresh period of 8 years. Okay. So, answer is B. Such loss shall be treated as loss of the previous year in which amalgamation took place. So it will be treated as loss in the year in which amalgamation took place. From the year of amalgamation, it is eligible to be carried forward for next 8 years. Okay. Next, in the year of restructuring. See, this is the repeated one. In the year of restructuring, whatever the depreciation is there, the depreciation will be calculated for whole year. Whatever the total depreciation is there, that will be apportioned between preceding entity and new entity based on number of days of use. Okay. So the answer is B. Next, countries that employ explicit policies designed to attract international trade oriented activities by minimization of taxes and reduction or elimination of other restrictions on business operations is treated as tax havens. Next, A is using a motor vehicle for personal purpose. See, if he uses car for personal purpose, he should not claim depreciation in P&L account. If he claims depreciation, then it will lead to tax evasion. The answer is C. CBDT stands for Central Board of Direct Tax. Section 130 deals with faceless jurisdiction of Income Tax Authority. Answer is A. Next, as per section 178(3), dash of the company has to intimate the tax authority before he parts with any of the assets of the company or the properties in his hands, and has to set aside the amount if any intimated. Liquidator. See, whenever company gets liquidated, liquidator is appointed. Liquidator will sell the assets. Whatever the money received, with that money he pays all the liabilities. Balance money will be distributed to shareholders. Now, liquidator, before he sells the assets, he need to give intimation to Income Tax Department. After he gets approval from Income Tax Department, then only he should sell the assets, otherwise he should not sell the equalization levy. What is the rate? 6%. ICDS 8. I think revenue recognition. No, ICDS 8 deals with securities. You need to remember, at least headings of ICDS. ICDS is applicable in case of income under the head PGBP. Answer is A. Black money, undisclosed foreign income and assets and Imposition of Tax Act 2015 extends to whole of India including Jammu and Kashmir. Whole of India. Answer is A. Next, rate of tax provided by black money, undisclosed foreign income and Imposition of Tax Act is 30%. Which of the following is a progressive tax? basic. Direct taxes are progressive in nature. Indirect taxes are regressive in nature. So which is progressive in nature? Direct tax. Direct tax is nothing but which one of the following is a not a tax saving investment? Housing loan repayment eligible for deduction under ATC, public provident fund ATC, life insurance premium ATC, fixed deposit. See, fixed deposit minimum for 5 years, then it is eligible for deduction under section ATC. Otherwise, it is not eligible for deduction under section ATC. So the answer is D. Perfect. In Income Tax Act, which is a certificate which an employer gives to his employees? Form 16. You would have heard practically also. Before filing ITR, we will ask for Form 16 of employee. Based on Form 16, we are going to file the ITR. Next. What percentage of tax is payable on long-term capital gain arising from transfer of securities, bonds, units, debentures? Actually 12.5%, right? Long-term capital gain under section 112 or 112A, it is taxable at 12.5%. It is not updated. It should be 12.5%. We can't do this. Is institute material MCQ. Next. As per subsection 8A of section 139 of Income Tax Act, a person may furnish an updated return within 24 months. You can file ITRU within 24 months from end of relevant assessment year, correct? Next, minimum alternate tax, MAT. Tax imposed on companies which pays tax 0 or no tax. Answer is A. Next, period up to AMT credit can be carried forward. AMT credit can be carried forward for 15 assessment years. Answer is C. If the recipient of income does not furnish his PAN to the deductor, then TDS is to be deducted. See, if PAN number is not given, TDS is required to be deducted 2 times into TDS rate or 20%, whichever is higher. So maximum TDS will be 20%. Answer is C. What are the conditions to be fulfilled for charging of income under the head capital gains? See, what is charging section? Capital gains 45(1). What charging section says? Asset must be a capital asset. Transaction should be a transfer. And that capital asset should be transferred during the current previous year. Then only capital gains are required to be calculated. So asset must be capital asset. Condition 1 satisfied. There must be a transfer of capital asset, condition 2 satisfied, and it has been affected during the previous year. So all the conditions are required to be satisfied. Answer is B. Maximum amount of exemption of a gift from a non-relative. See, for gift maximum exemption is 50,000. Next, last date for filing of IT return of income of individual. See, for an individual, if tax audit is not applicable, due date for filing ITR is 31st July of assessment year. The answer is A. Return filed after the due date, that return we call as belated return, correct? Sole proprietor is liable to tax at what rate? Slab rate, correct? Default tax rates, optional tax rates. Capital asset excludes all except stock in trade is excluded. Personal effects are excluded. Rural agricultural land is excluded. So what is not excluded? Jewelry is included. So that is the answer. Next, long-term capital loss can only be set off against long-term capital gain. Long-term capital loss can be set off only against long-term capital gain. ICDS 4 deals with revenue recognition. I think it is correct. Under which section interest shall be charged for deferment of advance tax? See, if you defer payment of advance tax, interest will be levied under section 234C. For filing return of income in respect of various entities, Income Tax Act 1961 has prescribed 3 due dates: 31st July, 31st October, 30 November. Return of company has to be verified by managing director or director. Due date for filing return of a company with a business loss. See, every company is required to file ITR on or before 31st October of assessment year. So, the answer is C. Mr. Ram has received a sum of 51,000 on 15 September 24 from relatives on the occasion of his marriage. See, at the time of marriage, not only from relative, from any person, if any gift is received at the time of marriage, it is not taxable, it is exempt. The entire 51,000 is exempt from tax. Rate of TDS on rental payments of plant machinery equipment under section 194I in case of building 10%. In case of plant and machinery and equipment, rate of TDS is 2%. Next, Mr. Ram, a resident Indian, wins 10,000 in a lottery. Which of the statement is true? See, up to 10,000, no TDS is required to be deducted. Correct? As per section 194I, threshold limit is 30,000 rupees. Sorry, 10,000 rupees. So, if you earn income from lottery up to 10,000, you are not required to deduct TDS. No tax is deductible at source. Next, X Limited, a domestic company not opting for provisions of section 115 BAA, has total income of 10 crore 1 lakh for assessment year 24-25. Gross receipts 260 crores. That means less than 400 crores. So what is the tax liability? See, 10 crore 1 lakh means it is nearest to surcharge. So how it will be? Tax on 10 crores plus additional income over and above 1 crore, 1 lakh plus HEC, correct? Now shall we calculate? On 10 crores, how much is the tax rate? 25%. So 250 lakhs. If total income is more than 10 crores, surcharge rate is 12%, correct? Up to 10 crores, surcharge rate is only 7%. Into 7%, 17.5 lakhs, 267.5 lakhs plus 1 lakh. See, we need to calculate marginal relief. Step 1, tax on 10 crore 1 lakh. How much is the tax? Tax at the rate of 25%. 2 crore 50 lakh 25,000. To this, we need to add surcharge at the rate of 12%. How much? 30 lakh 3,000. Two crore 80 lakh 28,000. Correct. Now, step 2, tax on 10 crores plus 1 lakh. How much is tax on 10 crores plus 1 lakh? 268 lakh 50,000. Correct. 268 lakh 50,000. So step 3, marginal relief is equal to step 1 minus step 2. 11,78,000. So step 4, final tax liability is equal to step 1 minus step 4 plus HEC at the rate of 4%. 280, 28,000 minus step 1 minus step 3. Two crore 79 lakh 24,000. Do you have the answer? So before HEC, okay, before HEC the answer is 2 crore 68 lakh 25,000. Answer is A. Sorry, 2 crore 68 lakh 50,000. Answer is, you can see 2 crore 68 lakh 50,000. Good. Next, 59. Who among the following is not mandated to file ITR? Private limited company is required to file ITR. Manohar aged 66 years having total income 3,50,000. See, it is greater than 3 lakhs under optional tax rates. He is required to file ITR. Jay, who traveled to Dubai during the year, spent 4,50,000. That means he spent more than 2 lakhs. He is also required to file ITR. Sita, non-resident, having assets worth 2 crores in India and 5 crores outside India, has not earned any income. See, non-resident did not earn any income in India. Then non-resident is not required to file ITR. So the answer is D. Next, public charitable trust having its object medical relief to poor. Running a medical shop in which it has commercial receipts which exceed 20% of total receipts. See, if charitable trust is registered under any other objects for general public utility, in that case, business receipts should not be more than 20%. If business receipts are more than 20%, then exemption under section 1112 is not available. However, here it is not registered under any other objective. Here it is registered under medical relief. So even though business receipts are more than 20%, still section 11 exemption is available, but proper books of accounts are required to be maintained. So whether such a trust can claim application based exemption, yes, it can claim exemption, but separate books of accounts are required to be maintained. Such business is incidental to attainment of the objects of the trust, and provided separate books of accounts are required to be maintained. So answer is D, both B and C. See, very simple. Trust, if it is created for education, medical and all, gym, yoga, then business receipts can be greater than 20% of gross receipts, but books of accounts are required to be maintained. Then section 11 exemption is available. Okay, in case of if trust is registered under any other object of general public utility. In this case, business receipts shall be less than 20% of gross receipts. Then only section 11 exemption is available. If business receipts are greater than 20% of gross receipts, then section 11 exemption is not available. Are you able to understand? Section 91 deals with, see, section 91, when section 91 is applicable, if there is no DTAA, then relief will be calculated under section 91. So section 91 relief is unilateral relief. Only India will give that relief. Okay. Answer is B. Next, in respect of DTAA, generally India follows UN model. Which section deals with methods of computation of arm's length price? Section 92C. Answer is C. As per which section any specified domestic transaction is carried out between associated enterprises Said transaction shall be carried out at arm's length price. See, with regard to arm's length price, which section will speak? Section 92, right? So the answer is section 92. When an SSE fails to furnish any information relating to specified domestic transaction, quantum of penalty as a percentage of value of transaction. See, in transfer pricing, whenever you do transaction with associated enterprise, or whenever you do international transaction or specified domestic transaction, you should disclose all the documents, you should disclose all the transactions. If any transaction is failed to be disclosed, then 2% of value of transaction will be the penalty. 2%. Answer is as per section 94B, you know, thin capitalization, actual interest or 30% of EBI TDA, whichever is lower, correct? So 30% of EBI TDA. Advance pricing agreement shall be valid for such period not exceeding consecutive years. See, maximum APA is applicable for 5 years, right? Next, arm's length price is to be determined by applying resale price method, because these are not methods. There are only 5 methods: cost plus method, resale price method, comparable uncontrolled price method, profit split method, transactional net margin method, correct? Next, provisions of section 92 will apply only if aggregate value of specified domestic transactions exceeds 20 crores. See, if specified domestic transactions are more than 20 crores, then only transfer pricing provisions are applicable. Otherwise, transfer pricing provisions are not applicable. Next, uncontrolled transaction means a transaction between uncontrolled means what? If transaction happens between associated enterprises, it is not uncontrolled transaction, it is controlled transaction. So uncontrolled transaction means transaction between non-associated enterprises, and so enterprises other than associated enterprises. Answer is A. Information and documents. As per transfer pricing, information and documents are required to be maintained for 8 years from end of relevant assessment year. If any person fails to keep and maintain any such information and document, how much is penalty? If you do not maintain documents, then penalty is 2% of value of each international transaction or specified domestic transaction. 72. Yeah, B. Answer is correct. Next, general anti-avoidance rules. See, these are applicable from, GAR provisions are applicable from 1st April 2018 onwards. Answer is A. 73A. But answer given here is 1st April 2017. Wait, let us check. GAR. GAR is applicable from assessment year 18-19 onwards. That means assessment year 18-19. That means financial year 17-18. So here no clarity was given whether it is assessment year or previous year. So we will take previous year. GAR is applicable from 1st April 2017 on. Next, GAR provisions shall not apply. See, GAR provisions are not applicable if tax avoidance is up to 3 crores. Only if tax avoidance is more than 3 crores, then only GAR provisions are applicable. So, an arrangement where tax benefit in relevant assessment year arising in aggregate to all parties to the arrangement does not exceed a sum of 3 crores. Next, 2 enterprises shall be deemed to be an associated enterprise where one enterprise holds at least greater than or equal to 26% shareholding in another enterprise. Generally, 2 enterprises shall be deemed to be associated enterprise where one enterprise holds directly or indirectly 26% or more of equity shares. Because who have voting power? Equity shareholders will only have voting power, right? 2 enterprises shall be deemed to be associated enterprises if a loan advanced by one enterprise to other enterprise constitutes at least 51% of assets. 51% of book value of total assets. Answer is 51% or more, greater than or equal to 51%. So the answer is D, I think. Wait, let me check. 77. Yeah, answer is D, greater than or equal to 51%. Zero India Private Limited borrowed 500 crores from an Indian bank. Why INC USA guaranteed the borrowings of Indian company? See, if at least 10% of borrowings are guaranteed, then both will be treated as associated enterprises. 500 crores into 10%, 50 crores, right? So the answer is C. Two enterprises shall be deemed to be associated enterprises when 90% or more of raw material and consumables required for manufacturing of goods by one enterprise are supplied by other enterprise. Answer is C. Next, under transfer pricing, international transaction means. See, international transaction means transaction between two or more associated enterprises. Out of them, at least one should be a non-resident. So, transaction between two or more associated enterprises, either or both of whom are non-residents. Answer is A. One of them can be non-residents, sufficient. Both are not required to be non-residents. At least one of them shall be non-resident. International transaction shall be in the nature of, see, all transactions are covered. In transaction can be either purchase transaction or sale transaction, service transaction, expenditure transaction, borrowing transaction, lending transaction. Even allocation of cost is also treated as transaction. Failure to keep and maintain information and documentation. Abba, how many times he will ask? If you if you fail to maintain any documentation, penalty is 2% of value of international transaction or specified domestic transaction entered into by taxpayer for which documentation is not kept. Answer is B. Aggregate amount of specified domestic transactions. See, specified domestic transaction should be less than or equal to 20 crores. The order of transfer pricing officer determining arm's length price of international transaction. See, TPO order is binding on assessing officer. So answer is A. Secondary adjustment. Secondary adjustment means what? Whatever the primary adjustment amount is there, that should be brought to India within 90 days from end of relevant assessment year. So any transfer pricing adjustment which is made on the basis of arm's length price of an international transaction. An adjustment in the books of accounts of the SSC and its associated enterprise to reflect the actual allocation of profits that are consistent with transfer price. I think B is the answer. Yeah, B is the answer. Generally, secondary adjustment means you need to bring excess money to India within 90 days. Otherwise, interest income will be calculated and it will be added to the total income of SSC. Secondary adjustment shall be made with primary adjustment to transfer price if it has been made suo motu by SSC. Correct. See, secondary adjustment is possible in 5 cases. If primary adjustment is done suo motu by SSC, primary adjustment is done by assessing officer and it is accepted by SSC, and primary adjustment is because of APPA advance pricing agreement, primary adjustment is because of safe harbor rules, fifth one, primary adjustment is because of mutual agreement procedure. Here not accepted, that is not correct. Correct answer is if primary adjustment is done suo motu by SSC. In case of secondary adjustment where international transaction is denominated in INR, interest income or excess money is to be brought into India. Excess money available with associated enterprise shall be computed. See, when you are calculating interest income, if transaction is denominated in Indian currency, interest rate is equal to SBI marginal cost of lending rate as on 1st April of previous year plus 3.25%. So the answer is A. If transaction is denominated in foreign currency, then we will take 6 months LIBOR as on 30th September of previous year plus 3%. Answer is B. Maximum validity of APPA. APPA is maximum valid for 5 consecutive years. CBDT may declare advance pricing agreement to be void ab initio with the approval of central government. If there is change in law after signing the agreement, advance pricing agreement has been obtained by way of fraud, there is change in facts after signing, all of the above. See, after you sign APPA, if there is change in law, nowadays Income Tax Act 1961 is going away, Income Tax Act 25 is coming. If there is change in facts, or if department comes to know APPA is obtained by way of misrepresentation of facts, in all these cases, APPA is treated as void. But here what is being asked? Here they are asking void ab initio, void from the beginning. When it will be treated as void from the beginning? If APPA is obtained by way of misrepresentation of facts. So here the answer is C. In that case, APPA is treated as void from the beginning onwards. So in question he is asking void ab initio. So the correct answer is C. The pre-filing consultation shall not bind CBDT or proposed applicant to initiate APPA process. See, pre-filing consultation means what? SSC wants to enter into advance pricing agreement. Before entering into advance pricing agreement, department people and SSC, they both will meet. They will check whether APPA is feasible or not. If APPA is feasible, they will proceed further. If APPA is not feasible, they will stop. So before doing discussions of advance pricing agreement, they will do some consultation. Okay. So in that consultation, if APPA is feasible, they will write APPA. If APPA is not feasible, they will not write APPA. Just because they met, it is not mandatory that they should write advance pricing agreement. They are just meeting to check whether advance pricing agreement is possible or not. If it is not possible, they will leave. Just because they met, there is no such rule that they should mandatorily write APPA. So pre-filing consultation does not bind SSC to mandatorily enter into advance pricing agreement. Okay, so answer is A. As per section 92 CD, modified return for first previous year in respect of rollback years shall be furnished within 3 months. Answer is C. RAM Limited Kolkata having international transaction exceeding 100 crores omitted to furnish report under section 92E. If transfer pricing provisions are applicable, if you do not furnish audit report, penalty is 1 lakh. GAR stands for General Anti-Avoidance Rules. Tax haven is a place where tax is zero or there is no tax. Answer is D. In assessment of Lakshmi Private Limited, there was increase in income by way of arm's length price adjustment of 200 lakhs. See, how much is tax to be paid to avoid secondary adjustment? 20.9664%. 15,000 arising in country B, with which India has DTAA, has been taxed in the hands of Mr. Kabir as well as Miss Yamini. See, same income taxed in hands of two different persons. Then the type of tax we call as economic double taxation. Okay, economic double taxation, and remedy for it is mutual agreement procedure. Economic double taxation remedy is mutual agreement. Transfer pricing provision should not be applied in a cases where adoption of arm's length price. See, because of arm's length price, if total income decreases or losses increases, then transfer pricing provisions are not applicable. So the answer is C, both A and C. Sorry, the answer is D, both A and C. Charitable institution engaged in education of yoga in India, registered under section 12AB of Income Tax Act 1961. For previous year ended 31st March 25, it received a donation of 30 lakhs, out of which 8 lakhs is anonymous donation. What amount of anonymous donation would be taxable at the rate of 30%? See, Anonymous donation. How much? Anonymous donation is only 8 lakhs. From anonymous donation, deduction is allowed. How much is deduction? 5% of total donation or 1 lakh, whichever is higher. How much is total donation? Total donation is 30 lakhs. 30 lakhs into 5%, 1 lakh 50,000, right? Yeah, 1 lakh 50,000 or 1 lakh, whichever is higher. So 1 lakh 50,000 is allowed as donation. Balance 6 lakh 50,000. That is taxable. So the answer is A. Let me check. Search conducted in the premises of Harichand Jewelers on 21st January 25. Following unaccounted items were found during the course of search. Which of the following could not be seized? See, all assets, books of accounts can be seized other than stock in trade. Stock in trade cannot be seized. Here jewelry is stock in trade. So jewelry stock in trade cannot be seized. That is the next. Nirveer Limited has received 99 lakhs net of TDS. See, 99 lakhs is net of TDS. That means 99 lakhs divided by 90 into 100. How much is gross dividend? Gross dividend will be 99 divided by 90 into 100. 110 lakhs. See, generally on dividend, TDS rate applicable is 10%. After 10% TDS deduction, 99 lakhs was received. That means 99 lakhs is at 90% level. If it is at 100% level, gross dividend is 110 lakhs. It has distributed 105 lakhs as dividend to its shareholders on 31st July 2024. See, how much is gross dividend? 110 lakhs, correct? From this 110 lakhs, deduction under section 80M is allowed. Deduction under section 80M. How much is the deduction? Like amount of dividend distributed to shareholders up to the ITR due date. Up to the ITR due date, 105 lakhs is distributed, or dividend received 110 lakhs. Whichever is lower means 105 lakhs is allowed as deduction and balance 5 lakhs is. So how much is allowed as deduction? 105 lakhs is allowed as deduction. 101 C is the answer. Next, Mediterranean Cargo, a company based in Malaysia operating its ships to and fro from Mumbai port, collected freight of 85 lakhs, demurrage 5 lakhs, handling charges 2 lakhs. So, how much is total? 85 lakhs plus 5 lakhs, 90 plus 2, 92 lakhs. Plus, in respect of goods shipped at Mumbai port, it incurred expenses of 35 lakhs during the year. In respect of goods shipped at Dublin, Ireland, it received 50 lakhs. So total how much is received gross freight? 92 plus 50, 142 lakhs. Its tax liability. First of all, presumptive income is equal to 7.5% of 142 lakhs. How much? 10 lakh 65,000. And in case of domestic foreign company, right? What is the tax rate? 35%. 3,72,750 plus 4% HEC. 3,87,660. This is the 102 B. Correct. Next, royalty of 10 lakhs received by foreign company from an Indian concern in pursuance of agreement approved by central government in previous year 24-25. See, royalty income is generally taxable under section 115A at the rate of 20%. So 10 lakhs into 20%, 2 lakhs plus 4% HEC. The answer is 2 lakh 8,000. I think the answer is B. Royalty of 10 lakhs received by a foreign company from an Indian concern in pursuance of agreement approved by central government. My dear students, this is section 115A Bear Act. In Bear Act also you can see in case of royalty income, you can see income by way of royalty or fees for technical services. The rate given here is 20%. Okay. So the answer is 2,08,000, but answer given by institute is 1,04,000, which I feel is not correct. Okay. Next, XYZ Limited set up a manufacturing unit in Durgapur on 15th July 2024. It invested 30 lakhs in new plant and machinery on 15th July 24. It invested 50 lakhs in new plant and machinery on 20th December 24, out of which 10 lakhs was second hand asset. What is the amount of depreciation? So 3 points. 30 lakhs, 30 lakhs on 15th July 24. Balance 50 lakhs on 20 December 24. See, first we will calculate normal depreciation. Normal depreciation is 15%. As it is put to use for more than 180 days, we will calculate full depreciation. As it is put to use for less than 180 days, we will calculate half depreciation. So 30 lakhs into 15%, how much? 4,50,000 plus 50 lakhs into 15% into 1 by 2. Much? 3,75,000. Next, additional depreciation. As it is put to use for more than 180 days, full 20% is available. 30 lakhs into 20%, 6 lakhs. Out of this 50 lakhs, 40 lakhs is first hand, 10 lakhs is second hand. So this is not eligible for additional depreciation. Only first hand is eligible for additional depreciation. So 40 lakhs into, as it is put to use for less than 180 days, only 10%. It is 4 lakhs. So how much is total depreciation? 4,50,000 plus 3,75,000 plus 6 lakh plus 4 lakh, 18,25,000. Answer is C. Correct. 104 answer is C. Next, 105. Foreign institutional investor or a qualified foreign investor made investments in municipal debt securities for which interest of 5 lakhs is payable. TDS to be deducted. See, whenever you pay amount to foreign institutional investor, TDS rate is 5% plus HEC. So 5 lakhs into 5% plus 4% HEC. How much? 26,000. So the answer is C. X Limited filed its return of income for assessment year 25-26 on 30th September 2025. Return is selected for regular assessment under section 143.3. The time limit for service of notice we have discussed. Time limit is 3 months from end of assessment year. Correct. So assessment year is ending on 31st March 26. From here 3 months means 30 June 26. Okay. D is the answer. Rounding off in respect of which interest is to be calculated to the nearest multiple of. See, before you calculate interest, shortfall shall be rounded off to nearest multiple of 100, right? Rounded off to. Actually, shortfall should be rounded off to previous multiple of 100. Previous multiple of So the answer is A. A computer was purchased for 8 lakhs on 4th October. It was installed and put to use on the same date. So 4th October means put to use how many days? 31 minus 3. October 28 days, November 30, December 31, January 31, February 28, March 31. So put to use is 179 days, which is less than 180 days. So we need to calculate half rate of depreciation, 8 lakh into 20%, 1,60,000. 108, yeah, answer is next. 109. Mr. Sumit had bought a laptop for rupees 50,000 on 1st April 2022 for his personal purpose. He started using the laptop for his business purpose since 2nd May 2024. On the date, fair market value of laptop was 40,000. See, laptop after using for personal purpose, if it is brought into business, its value will not change. Still, you will calculate depreciation on 50,000 only. And it is put to use for more than 180 days. You are going to calculate full rate of depreciation. 50,000 into 40%, 10,000 is depreciation. Sorry. 50,000 into 40%, calculation mistake. 20,000. 20,000 is the depreciation. Next, Mr. Rahul has income of 52 lakhs under PGBP. One of his business is eligible for deduction under section 80IA. The profit from such business included in the business income is 35 lakhs. What would be the tax liability rounded off, assuming he has no other income and he exercises option of shifting out of default tax regime? That means he is paying taxes under optional tax rates. In that case, gross total income is 35 lakhs. From that, gross total income is 52 lakhs. From that, you can claim deduction under section 80IA. Deduction under section 80IA is 35 lakhs. So how much is taxable income? Taxable income is 17 lakhs, correct? 17 lakhs. On 17 lakhs, how much is the tax? Age is not given. So you can take reasonable assumption. He is a resident individual less than 60 years. So up to 2.5 lakh, 0. Above 2.5 lakh, up to 5 lakh, tax is 12,500. Above 5 lakh, up to 10 lakh, tax is 1 lakh. Above 10 lakh, tax rate is 30%. 7 lakh into 30%, 2 lakh 10,000. So 2 lakh 10,000 plus 1 lakh plus 12,500. 3 lakh 22,500 plus 4% HEC. 335,400. The correct answer is 335,400, but that answer is not available here. So there is mistake for this question. Next, Mr. Smith, a resident individual, made an advertisement in a website owned by a company for sale of his house property at Kolkata, for which he paid 2,35,000. How much is the amount to be deducted by way of equalization levy? See, whenever he sells his house property, it is for personal purpose. For personal purpose, if you give advertisement, equalization levy is not applicable. So, no equalization levy needs to be deducted. Equalization levy is applicable if aggregate amount of consideration is more than 1 lakh. So, answer is C. Mohan and Co. paid 5 lakhs to Elite Inc., a foreign company not having a PE in India, towards online digital advertisement charges. How much is the amount payable by Mohan and Co. as equalization levy? 5 lakh into 6%, 30,000. Answer is B. Next. How much is the minimum tax effect that should be involved to invoke GAR? 3 crores. I told you, only if tax evasion is more than 3 crores, then only GAR provisions will be invoked. Time limit for passing an order by transfer pricing officer. See, whenever reference is made to transfer pricing officer, whatever the time limit for completion of assessment is there, that will be extended by 1 more year. So overall 2 years time limit is available for assessing officer. Actually, for assessing officer, 2 years time limit is available, and transfer pricing officer is required to pass the transfer pricing order at least 60 days before the date of completion of assessment, before the due date for completion of assessment. Here, transfer pricing officer will not get 2 years. TPO has to pass order within 60 days, has to pass the order before 60 days, has to pass the order before 60 days, before which AO has to complete the assessment. AO has to complete the. But that option is not available. I don't think 2 is also not correct. None of the above should be the answer. You can check assessment procedures. Whenever case is referred to TPO, 1 extra year will be time limit available for AO to complete the assessment, and transfer pricing officer is required to give transfer pricing report at least 60 days before the date of completion of, before the time limit available for assessing officer to complete the assessment. Next, Rajiv Industries is engaged in manufacture of leather products. It was set up in backward area and became eligible for subsidy of 25% for generator. Actually, this is repeated. 12 lakhs. How much is subsidy? Subsidy at the rate of 25%. I think it will be 3 lakhs. Balance is 9 lakhs. Amount of depreciation. It was purchased on 15th December, put to use less than 180 days. So half rate, 9 lakh into 15% into 1 by 2. How much? 67,500. Next, Shubham engaged in business of wholesale trade, has a turnover of 80 lakhs for 23-24 and 240 lakhs for 24-25. In 24-25, he paid salary of 3 lakhs to Rohit, a resident, without deduction of tax at source. See, 3 lakhs means under default tax rates, it is less than basic exemption limit. So no TDS is required to be deducted. And he paid commission of 61 lakhs to Pramod, a resident, without deduction of TDS. On commission, TDS is required to be deducted under section 194H at the rate of 2%. As TDS is not deducted, 30% will be disallowed. 61 lakhs into 30%, how much? 18 lakh 30,000. Answer is C. Next, which model of DTAA does Government of India generally follow? India generally follows UN model of DTAA. Next, Alpha Limited has distributed on 30th June 25 dividend of 130 lakhs to its shareholders. During financial year 24-25, Alpha Limited has received dividend of 108 lakhs net of TDS. That means how much is gross? 108 lakhs divided by 90 into 100. Gross dividend is 120 lakhs. And 30 lakhs from a foreign company in which it has 5% shareholding. So 120 lakhs plus 30 lakhs. Total dividend received is 150 lakhs. How much deduction is available? Less deduction under section 80M. Dividend distributed to shareholders within the due date. So within the due date, how much dividend was distributed? 130 lakhs. Okay, or actual dividend received 150 lakhs. Whichever is lower means 130 lakhs is allowed as deduction. Answer is C. Next, relief where there is no avoidance of DTAA. If there is no DTAA, then relief will be given by India under section 91. The type of relief we call as unilateral relief. Next, for Murali Limited, there was an outstanding interest payment due to a nationalized bank 200 lakhs, which was converted into 8% debentures on 12th March 2025. How much of interest due to the bank would be deemed as paid? See, just because interest amount is converted into loan, it will not be deemed as payment. Okay, so it will not be allowed as deduction. Zero, nothing will be allowed as deduction. I discussed in 43B. Just because interest amount is converted into second loan, conversion of interest into second loan will not be treated as payment and nothing is allowed as deduction. Whenever that second loan is paid, then whatever the amount of second loan that is paid is there, that will be allowed as deduction. So in this case, 0 will be allowed as deduction. Next, Nirmal Fertilizers Private Limited is a manufacturer. A factory building has been constructed for 40 lakhs and occupied on 12th February 25. Additional depreciation 0. Additional depreciation is available only for plant and machinery. For factory building, additional depreciation is not available. Are you able to understand? MLC Limited earned rupees 20 lakhs by way of transfer of carbon credit. See, transfer of carbon credit is taxable under section 115 BBF at the rate of 10%. So 20 lakhs into 10%, answer is 2 lakhs. Plus 4% HEC, answer is 2 lakh 8,000. Income tax appellate tribunal can rectify its own order if that mistake is apparent from record. Apparent mistake, answer is D. Next, Mr. Amit, a property dealer, sold flat in Kolkata, stamp duty value of which is 3 crores for 2.6 crores to his friend Mr. Biswajit. Mr. Amit had purchased the flat 1.5 years back for 2 crores. So capital gain is 1 crore rupees and he is property dealer. 1 crore rupees capital gain is taxable as business income and 40 lakhs is taxable. See, same repeated, this type of MCQ we have done earlier. You can see Coco and Popo, same MCQ. 1 crore will be treated as business income because he is property dealer, and 3 crore minus 2.6 crore, 40 lakhs will be treated as income taxable under other sources. Answer is C. Next, dividend received by a real estate investment trust REIT from special purpose vehicle and distributed to its unit holder is exempt in the hands of REIT only. If SPV is a specified domestic company, taxable in the hands of unit holder only. If SPV does not exercise option under section 115 BAA. Exempt in the hands of REIT and unit holders unconditionally. Taxable, I think answer is D. If special purpose vehicle is paying taxes under 115 BAA, then already, if it is paying taxes under 115 BAA, then in the hands of real estate investment trust, it is exempt. In the hands of unit holder, it is going to be taxable. But if it is not exercising, if it does not exercise option under section 115 BAA, you can see does not exercise option. That means if special purpose vehicle, if domestic company, if it is paying taxes at normal tax rates, then as already domestic company has paid tax, again dividend is not taxable in the hands of unit holder and not taxable in the hands of real estate investment trust. Answer is D. Next, Surya is aggrieved by an order passed by CIT appeals imposing penalty under section 270A for underreporting of income. What is the appellate remedy available to him under Income Tax Act and specify time limit? See, whatever the order passed by CIT appeals is there, that can be challenged at ITET within 2 months from end of the month. But provision is not updated. Before 1st October 24, you can challenge within 60 days. On or after 1st October 24, you have to challenge within 2 months from end of the month. in which order of CIT appeals is received. Here 2 months concept is not there. He gave old answer B 60 days, but present provision is appeal should be filed within 2 months from end of the month in which appeal is CIT appeals order is received. 24,300 arising in country B with which India has DTAA has been taxed in the hands of Ras as well as Miss Susmita. This is an instance of, and the remedy for the same is through. See, when one income is taxed in the hands of two different persons, same income, then the type of taxation we call as economic double taxation, and method to counter it is mutual agreement procedure. This is repeated one. Already this type of MCQ we have seen. So the answer is A, economic double taxation. Remedy is mutual agreement procedure. Assessment order in response to notice under 143.2. See, in response to notice under 143.2, order will be passed under 143.3. Shall be completed within a period of 12 months from end of relevant financial year. Okay, nisham. Not financial year, assessment year. See, previous year 24-25 is there. In 24-25 you will file ITR. There is previous year 25-26. In 25-26, sorry, in 24-25 you will earn income. For this income, ITR will be filed in 25-26. From end of 31st March 26, 12 months time limit is there to complete assessment under section 143.3. Correct? That means what? How much time limit is available? 12 months from end of assessment year. Correct? So the answer is D. Next, benefit of taxation of presumptive income under Income Tax Act 1961 would not be available to Vivek, a non-resident, in respect of. See, if he is engaged in plying, hiring or leasing of goods carriages, 44 AE he can choose. 44 AE is applicable for all SSCs. Non-resident also can choose 44 AE. Operation of ships, 44 B. Operation of aircrafts, 44 BB. Civil construction in connection with an approved turnkey project. This is available only for foreign company. So, is it available for non-resident? It is not available for non-resident. So, he cannot choose civil construction in connection with an approved turnkey project. Next. During the course of assessment, in case of A and Co firm, assessing officer found out one accommodation entry for 7 lakhs from another firm by name X and Co. Both A and Co and X and Co have admitted fake invoice. If they admit it as fake invoice, it will lead to underreporting of income. Penalty is equal to 200% of tax. So the answer is D, 200% of tax. On 7 lakhs, how much is tax? 7 lakhs into 30%. 2 lakh 20,000. Correct? Sorry, 2 lakh 10,000. So 200% means 4 lakh 20,000. Answer is D. Next, Income Tax Authority having jurisdiction of Raj and Co. conducted a survey under section 133A and seized books of accounts and other documents on 10th October 24. What is the maximum time limit? See, under survey, books of accounts can be seized and they can be seized for maximum 15 working days. 15 days excluding holidays. So up to 15 days exclusive of holidays. Answer is A. Next, while processing the return under section 143(1), which of the following cannot be adjusted? This is repeated. D, addition of income appearing in Form 26A which has not been included. C, ICMA. Answer option C and option D are same. Which option we can choose? Like this only. I say ICMA answers. Next, Mr. Kamal, employed as manager with Tripod Limited, pays rent of 50,000 per month to his landlord. Which of the following? See, he is employee. So 194I is not applicable to him. 194IB is applicable. How much rent was paid? Rent paid is 50,000 per month. So TDS is required to be deducted at the rate of 5% in March 2025. Okay. TDS, see, 10% under 194I. This is not correct. Liable to deduct TDS at the rate of 2% under 194IB. No, not correct. Because under 194IB, TDS rate is 5%. Not liable to deduct TDS. This is also not correct. He is required to deduct TDS under section 194IB at the rate of 5%. Kamal is liable to deduct TDS 2% every month. This is also not correct. All 4 options are wrong. I don't know which answer to be chosen. For this kind of MCQ, institute needs to give grace marks. Next, ABC Company Limited, Mumbai proposes to enter into a transaction for purchase of raw material from USA and sale of finished goods to its group company located in South Africa. It has obtained advance ruling in respect of transactions, but it is aggrieved with the ruling given by Board for Advance Ruling. See, with ruling given by authority of advance ruling, if you are not satisfied, you should file appeal to High Court. Okay, you cannot file appeal to CIT appeals, you cannot file appeal to ITET, you should file appeal to High Court. Answer is C. Next, Arya Limited has spent sum of 40 lakhs towards CSR. CSR expenditure is not allowed, right? Total 40 lakhs will be disallowed. Amount of deduction available. Amount of deduction available is 0. You cannot claim CSR expenditure as deduction. Which of the following method of computing arm's length price is not a transaction based method? Profit split method is not a transaction based method. Vikash, a resident, sold virtual digital asset 194S. On virtual digital asset, TDS rate is 1%. 7,20,000 into 1%. 7,200. Sahayata Cooperative Society is engaged in manufacturing activity and was set up and registered on 10th April 24. Its total income for the previous year 24-25 was 22,50,000. How much is the income tax payable? 15% plus 10% surcharge plus 4% HEC. 17.16. 3,86,100. That is the answer. Next, Mr. Shivam is a resident individual who owns an apartment in Dubai, acquired on 6th July 24. He had disclosed only 60% of its value in his ITR. Assessing officer received information of partial non-disclosure on 25th March 25 and he issued notice on 10th April 25. Now, how much is taxable? Fair market, 40% of fair market value, because already 60% was disclosed. How much is undisclosed? 40%. Not actual value. 40% of fair market value is taxable. So 40% of fair market value as on 1st April of the previous year in which notice is issued. Notice is issued in 25-26. So as on 1st April 25. So the answer is D. Berry ratio, you all know, gross profit by operating expense. While determining arm's length price of transactions between X Limited Hyderabad and its holding company Wax Inc USA, there was an addition of 300 lakhs. How much is secondary adjustment? To avoid secondary adjustment, one-time tax is required to be paid. How much? 20.9664%. 62,89,920. Which of the following orders is not appealable before CIT appeals? If any order is passed with directions issued by Dispute Resolution Panel under section 144, then that order cannot be challenged at CIT appeals. It can only be challenged at ITAT. Correct? So the answer is D. Who among the following is not mandated to file ITR? Aged 66, total income is 3,50,000, which is more than 3 lakhs under optional tax rates. So he is required to file ITR. ABC Private Limited having incurred a loss of 1,50,000 during the year. To carry forward loss, it is mandatorily required to file ITR. Jessica, non-resident, having assets worth 2 crores in India and 5 crores outside India, she did not receive any income. Non-resident did not receive any income in India. Non-resident is not having any income in India. So she is not required to file ITR. Answer is C. Exemption under section 54 is available to individual and HUF. If you sell residential house property, reinvestment should be made in residential house property, then it is eligible for exemption under section 54. That benefit is available only for individual or HUF. Next, during the course of survey, premises of Adarsh & Co. on 10th January 25, stock of goods purchased for rupees 10 lakhs were found to be not recorded in the books of accounts. The firm has brought forward loss of 5 lakhs and incurred business loss of 2 lakhs for the year ended 31st March 25. Without considering the unaccounted stock, tax liability, undisclosed income, 10 lakhs into 78% under section 115 BBE. How much? 7,80,000. Mr. Avinash has advertised on Instagram to promote his business of coaching. He is required to pay 70,000. It is less than 1 lakh, right? So no equalization levy. Equalization levy required to be deducted is 0. Next, assessing officer imposed a penalty of 50 lakhs under section 271 AAD on the Rohit. Can he provisionally attach the property? See, provisional attachment is possible only if penalty is likely to exceed more than 2 crores. Here penalty is less than 2 crores. So there is one chapter, collection, recovery and refund. In that chapter I have told, if penalty is up to 2 crores, provisional attachment cannot be done. If penalty is likely to exceed more than 2 crores, then only provisional attachment can be done. So no, he cannot do so. Answer is D, I think. 148D, correct. Next, 149. Ravi sold his residential house on 15th May 2024 for 130 lakhs and earned long-term capital gain of 60 lakhs. He bought a new residential house in March 2025 for 55 lakhs in order to claim exemption under the Income Tax Act. See, this is tax planning. You sold house, got capital gains. If those capital gains are reinvested, you will claim exemption under section 54. Beta Limited accepted primary adjustment of 120 lakhs made by assessing officer in respect of goods sold by its associated enterprise in Indonesia. It has AE in Germany also. As regards repatriation, see, not only the associated enterprise with which you do the transaction, any associated enterprise can send money to India. Repatriation can be done by any associated enterprise, not only the associated enterprise with which you have done the transaction. So repatriation can be done by any of the associated enterprises. Answer is D. Advance pricing agreement is entered between. See, generally APA is entered between CBDT and SSC. I did not understand here. He gave unilateral advance pricing agreement, bilateral advance pricing agreement, and the answer given is B. See, the question and options both are appearing completely different. Next, Prakash Industries was subjected to search under section 132 and a sum of 250 lakhs by way of cash was found as undisclosed income. Prakash has unabsorbed depreciation. See, against undisclosed income, you cannot set off any unabsorbed depreciation. It is completely taxable. How much of the unabsorbed depreciation is eligible for set off? Unabsorbed depreciation is not eligible for set off. Answer is A. For Brad Inc. of Spain, which of the following would mean that it has a PE in India? Operating a factory in India will be considered as having PE. This is repeated. I think 3-4 times we have done the same question. PQR Limited, an Indian company, deducted 1,20,000 from various payments as TDS for the first quarter. However, it failed to file TDS return. If it fails to file TDS return, late fees is 200 per day up to maximum of TDS deducted up to maximum of 1,20,000. So the answer is A. Wait. A is 100 per day, right? Answer is D. 200 per day up to a maximum of 1,20,000. Next, 155. Avinash Private Limited, a resident company, received a royalty of 8 lakhs from a resident in India in respect of patent developed and registered in India. This is taxable under 115 BBF at the rate of 10%. Answer is A. 156. Mark, a Australian cricket umpire. He is not a player. So, 115 BBA is not applicable. Has earned income from cricket tournaments. See, generally for non-resident sportsman, non-resident entertainer, we will deduct TDS under section 194E. However, here he is umpire. So, TDS is required to be deducted under section 195. Answer is B. Next, 157. Specified domestic transactions only if they are more than 20 crores. Then only transfer pricing provisions are applicable. 158. Shivam, a resident individual, age of 38 years, has not furnished his return of income. However, his total income for such year assessed under 144 is 18 lakhs. Is penalty under section 270A attracted, and if so, what is the quantum of penalty? Misreporting of income, 200% of tax. How much is tax? 18 lakhs. What is the tax liability? Up to 2. Let's do it under optional tax rates. Let us see. 2,50,000 into 5%, 5 lakh into 20%, 8 lakh into 30%, MRC plus 4%. See, there are two possibilities. Under reporting of income, 50% of tax. Misreporting of income, 200% of tax. He did not file ITR. This might fall under underreporting of income, 50% of tax. Tax is 3,66,600 into 50%. How much? 1,83,300. No, that is not coming. Do calculation under default tax rates. Up to 3 lakhs 0, 3 lakh to 7 lakh 5%, 7 lakh to 10 lakh 10%, 10 lakh to 12 lakh 15%, 12 lakh to 15 lakh 20%, above 15 lakh 30%. Yeah, 239,200 divided by 2, 1,19,600. Answer is B. So under default tax rates, and penalty is for underreporting of income, 50% of tax. Under which of the following methods arm's length price shall be arithmetic mean? See, this is also vague. Generally, if more than 1 arm's length price is available, up to 5 arm's length prices, you can take average. Here he gave methods. The question itself is not correct. Total income of Construction Private Limited, a trading company, computed as per normal provisions of Income Tax Act is 8,40,000 for the year ended 31st March 25. Annual turnover was always less than 10 crores. Profit of company as per MAT, book profits are 18,40,000. What would be the final tax liability? 8,40,000 into 25% plus 4%. How much? That is normal tax. 2,18,400. Next, book profits 18,40,000 into 15% plus 4%. 2,87,040. Okay, ignore surcharge and cess. So before HEC, how much tell? 8,40,000 into 25%, 2,10,000. 18,40,000 into 15%, 2,76,000. Out of these two, whichever is higher means 2,70,000. D. 161. Book profit means net profit as per Schedule 3 of Companies Act. Correct. Next, Vijay Private Limited filed its return of income with suo motu adjustment 300 lakhs. See, if a primary adjustment is done on suo motu basis, excess money is to be brought to India within 90 days from ITR due date. So within 90 days from due date under section 139(1). Next, be a foreign company having TE in India, namely a CA non-resident associated enterprise has invested 900 crores. See, how much is allowed? Actual interest or 30% of EBI TDA, whichever is lower. Correct. Actual interest, how much? 900 crores into 10%, 90 crores. Or 30% of EBI TDA, 150 crores into 30%, 45 crores. Whichever is lower means 45 crores. Answer is B. This is repeated. In one of the exam questions also, this MCQ was asked. Next, Anurag Limited Mysore exported goods to its holding company Brave Limited China for crore and it has failed to keep and maintain information. This is also repeated. If documentation is not maintained, 2% of the value of transaction, 10 lakhs. Answer is C. While computing book profit, which one of the following? Brought forward losses or unabsorbed depreciation, whichever is lower as per books of accounts. Answer is D. XYZ Limited has debited a sum of 800 lakhs towards income tax in its statement of P&L for the year ended 31st March 25. It includes 40 lakhs towards surcharge and 8 lakhs towards HEC. How much would be the amount of disallowance? Total income tax including surcharge HEC will be disallowed. So 48 lakhs will be disallowed. Arvind, managing director of Arvind Construction, holds 70% of its paid up capital of 20 lakhs. Balance as at 31st March 25 in general reserve was 7 lakhs. Company as on 1st April 25 gave interest-free loan to supervisor, which in turn gave loan to managing director. See, private limited company, if it gives any loan to shareholder holding more than 10%, it will be, deemed as loan given to director and it is taxable under section 222E under income from other sources. Here loan is not given directly. Loan is given to supervisor. Supervisor gave loan to director. Loan is given indirectly. Even though indirect loan is given to director, still section 222E provisions are applicable and it will be deemed as loan given to director only. How much loan was given? 8.5 lakhs. But 8.5 lakhs is not deemed as loan. Loan given to director only to the extent of accumulated profits. How much are accumulated profits? 7 lakhs. So only to the extent of 7 lakhs it will be deemed as loan given under section 222E. Next, which of the following power is not vested with CBDT? CBDT can relax time limit for filing ITR. It can relax provisions relating to deductions under chapter 6A. Relaxation of provisions in relation to set off of loss. This power is not available. Answer is C. Section 91, unilateral relief. If income is taxed twice in more than one country but in hands of different taxpayers, economic double taxation. D. Which of the following orders is not appealable before commissioner appeals? See here option A and option B are same. An order of assessment passed by assessing officer in pursuance of directions of DRP. See, based on directions of DRP, if any order is passed, it is appealable at ITAT, correct? So the answer is C. It cannot be appealed at CIT appeals. Range concept principle is applied for transfer pricing if there is more than one arm length price, more than 5 arm's length prices. Answer is C. ABC Company Limited received 25 lakhs as government grant in respect of a machinery in previous year 23-24. That grant became refundable in July 25. What would be the consequence? See, whenever we received grant, we will reduce the cost of the asset. Whenever we give back the grant, then cost of the asset will be increased. Yeah, cost of asset increases and increased cost is allowed as depreciation. So it would be allowed on the resultant income for assessment year 25-26. Answer is B. So yeah, finally 173 MCQs released by institute are discussed. I wish you all the very best. Prepare well. Follow all my YouTube videos with regard to CMA final for December 25. Sufficient, you will clear in the examination. But you also need to do the problems. Whatever the chapters that I am discussing with you, for all the chapters you need to do the problems. Sufficient, you will clear. Thank you very much. I wish you all the very best.